Private sector credit sourced from local financial institutions by the business community currently stands at more than 9 trillion shillings. However, upward movement of interest charges on such credit lines appears to be the single largest worry for the business community.
Tricky because it means these people are supposed to pay beyond their expected cash flows, and what is actually going to happen is what happened in 2011, where we had an issue with those who are failing to pay, and the default rate went up, and we expect exactly this thing to happen.
With an already revised growth rate for this financial year at 5.3%, tax experts believe propping up of economic activities will now remain a Herculean task.
And generally in downtown, you will see a very slow pace of everything almost. I'm looking at maybe beginning of March or the last quarter of the financial year as the period when some things may pick up. We are also looking at the taxman being very, very aggressive in a very, very slow economy.
But the rise of interest rates on government securities that have since been oversubscribed is dampening hope for smooth and affordable access to private sector credit.
Because usually money flowing to government is going into expenditure, paying salaries, maybe sometimes infrastructure. But money that goes to the private sector, it will produce goods and services which people will buy and consume. It will employ people who will also now consume various services in the economy. So there's a bigger multiplier effect. So that's our only hope, that this is short-lived, so that we can see more money going to the private sector.
In the stock market, business has since dwindled in what some brokers have attributed to the exit of key foreign investors. Reina Ojon, NTV Business.